Thank you very much, Simon. So it's terrific to be back in Miami 3 years on, and I'm very looking forward to sharing with you some thoughts about what might have changed in those 3 years since I was last here. So for those of you who don't know me, I'm Malcolm Myers. I have been in classifieds and in marketplaces for 15 years. I started off at Naspers running M&A there. I've been an M&A advisor to the Scout Group for several years, and I run an advisory company which helps entrepreneurs raise capital for marketplaces, and we buy and sell marketplaces also for other players. Tend to get involved sort of Series B and later. Here's some examples of transactions I've worked on over the past 10 or so years. Across real estate, automotive, jobs, and horizontals, to name just a few. So today, I've been asked to talk to you about, today I'll structure things in 4 different ways. Valuation trends, what's been going on in terms of market value of some of the businesses which we're going to be talking about. What are the underlying trends which have been impacting real estate and cars? And then when we take a look at what's been happening, how has that turned out compared to what I was talking about a couple of years ago? So let's look at valuation. In a nutshell, valuations today are roughly where they were 3 years ago, or at the end of 2019. There was some enthusiasm at some stages, but by and large, they're where they were before, whether we talk about real estate or whether we talk about cars. In contrast, there was a huge amount of investor excitement about purely transactional models. If we go back to 2020 and 2021, you can see here, for example, OfferPad and Redfin, and also obviously on the car side, Carvana is of course the one which everyone is thinking about, but also similarly Cazoo, which had an important announcement yesterday about downsizing. These companies got a huge amount of excitement. They were valued at sometimes more than 100 times gross profit, and now have become much less valuable. And then in one very interesting example to talk about, since we're in the US today, is Zillow, who of course created a huge excitement over their offers, their iBuyer model, only to then have to withdraw it based upon the losses it was making. So was the market wrong? Was it the market wrong to get so excited about pure transaction platforms? Well, I would argue that no, because ultimately, if we talk about classifieds creates a consumer experience that is fundamentally broken, right? If you compare buying a car on classifieds, after you found the car you like, you're usually pushed offline to deal in a physical or quasi-physical way with dealers or brokers in the case of a home. Compare that to what we all know about buying goods online with one click. And some of you will remember this from last time. The classifieds platforms have actually been moving quite a lot. So although 3 years ago, for example, many of them had moved from simple listings businesses offering depth products to offering financial services, so making money out of car loans, making money out of mortgages. Since 3 years, we now find that there's a huge ton of companies here who are now car and real estate businesses who are actually into the transaction. So I want to talk more about those now. So let's start with real estate. So one of the key things we should bear in mind if you are a classifieds player is that the model where most of your revenues is coming from subscriptions from agents, especially long-tail real estate agents, I don't think it's a very healthy business model. This is an example here of a European player where roughly 65% of revenues are coming from agents selling fewer than 20 properties a year. And then much of what real estate agents actually do today can be done better, faster, and cheaper with software and data. And there's probably 3 things that require personal touch. If we think about viewings, it tends to be done with a human being. Negotiations is still best done with human beings, and providing sort of hand-holding advice. Those are done very well by human beings, but that doesn't mean to say that it has to have face-to-face contact. And the companies that are able to offer a personalized service on those 3 things, but everything else is done digitally and with software, those companies, in my view, will win. And of course, that's really what the tech-enabled brokerages, the purple bricks or the Redfins, are doing. And that means that over time, that bunch of small, long-tail agents, in my view, will have to either adapt by merging, combining, or they will fade away. We have the companies which have come in as tech-enabled brokerages, and then we have some who have made that transition. For example, a Compass or a Redfin, you could argue, has become much more of a tech-enabled brokerage operating at scale. I won't talk about the unit economics of Compass, which are special to themselves, but the idea of being a scale player using tech to make this whole process of selling a home or buying a home, this is, in my view, is immutable, and we can think about travel, we can think of banking, where high street presence no longer became core to offering the right service. I'd also add that if you're running a subscriptions-based model, for example, as a real estate portal, I don't think that's the best model to maximize revenues. And if you think about how the structure tends to work, it's you have packages you subscribe, sometimes and one of the main differences between the subscriptions is the number of premium options you can have, the number of premium slots where your property is at the top of the pile. Well, what that actually means is that if you're looking for a property, you're pushed to the premium ones rather than necessarily the ones with the best match. And I think over time, the real function of the portal should be to better match the buyer and the seller, and that will monetize best when you have a model which is commission-based or pay-per-lead-based. Because otherwise, if you match someone straight away, you don't have the ability to charge them months and months of premium subscription. So that's why I think we need to move to a transaction-based model along those lines. And of course, Zillow, I mean, let's go back to Zillow. I think Zillow has a lot going for it. I know that they lost a lot of money on iBuyer, but if you look at what's left of the business, they're actually taking a per-transaction view of the classic leads and listings business. And if this is actually how they report their numbers to their actual customers, that they did roughly 360,000 transactions last year. And for them, a transaction is a home which is sold using a Premier agent. It's including those which are on their Flex package, where there's actually a clear commission sale, or where there is a Zillow finance product involved. And their average revenue per transaction for these 360,000 transactions is $4,100, which, given that the average home price in the US is around $250,000, $275,000, is a pretty good number. And they've been able to generate $2 billion in revenues last year. Again, no iBuyer included, pure subscriptions and transaction revenues. And the contrast that with how Rightmove looks at things, Rightmove still talks about having advertisers and how much that advertiser spends. And as a result, they have a very broad approach. You'll find most properties in the UK are on Rightmove, but the average revenue per property is only about a couple of £100. One other interesting thing that's been happening is that during the pandemic, there was a huge shortage of supply in real estate. And portals suddenly started to think, we need to, rather than focusing on generating buyer leads for our agent clients, we now need to find leads or vendor leads, people who actually want to sell their homes. And some of these companies have been around for a long time. I think Meir Ajan has actually represented at one of Simon's other conferences. But the point is, what's changed is the focus of some of the bigger groups as well on having lead sourcing. Rightmove has created a lead generation product. Immo-Verkauf, which is part of Immo Scout in Germany, is a company which is sourcing specifically mandate leads for agents. And what's particularly interesting is that these models are now increasingly moving to revenue share. So that taboo on commission sharing, which some of you have told me in previous conferences it's not going to happen, it's beginning to happen now. And it's happening on the seller leads. The agent would rather have 70% of the revenue from a vendor mandate than not have it at all. Now, iBuyers, we've also talked a lot about in the past. What's fascinating about iBuyers is how they have expanded into becoming broader fintech-powered real estate platforms. So what do I mean about that? There's two fintech products which are being more and more commonplace now. NCO, or non-contingent offers, is when the platform is effectively guaranteeing you as a buyer that you get all the money you need to buy the home, the specific type of home which you're looking for. And then buy before, so that means that if you're competing against people who have bank-based funding and may not have enough funding to cover the entire price, you can win in those bidding wars. And then the second product is buy before you sell, or BBYS as I've called it. This is the product where you want to sell your own home and buy a new home, and these products allow you to actually fund the purchase of the new home, get the home that you really wanted, and then the partner, the platform, will take care of selling your existing home for you. So I think these products are really interesting, and what's fascinating is how both OpenDoor and OfferPad have decided that they can't just rely on a buyer model, but they also want to effectively offer these products to their customers. And then the other interesting thing is how real estate agents are now becoming part of the same ecosystem. So for example, OpenDoor allows agents to bring additional properties to the OpenDoor platform, which are then sold on a commission basis without OpenDoor necessarily having to buy them. So that's a way of getting much more capital efficiency out of the iBuyer model. And Knock and Orchard are here because they were some of the earlier companies to develop these kinds of fintech-powered services. In Europe, we haven't seen this level of innovation, which surprises me because the European housing market is completely clogged with these housing chains which don't get sold. But what is interesting is how this idea of collaborating with agents has changed. So, for example, Casavo, which is one of Europe's larger iBuyers, are now also allowing agents to use their platform to post their properties for sale, and again on a commission-sharing basis. So I think that makes a lot of sense. And I do, by the way, think that buy before you sell will and has to come to Europe, but it's a bit more complicated in the US. And perhaps the most exciting thing of all is that if you look to more emerging markets, we're seeing examples of what I would call fully transactional real estate marketplaces. So Loft also started as an iBuyer, but also rapidly branched out to become a platform where, again, agents can bring properties for sale on a commission basis, and you as an individual can put your home directly on this platform for sale. So, and Quinto and ours, a different entry point. They were a managed rentals platform, but they've also expanded out to do sales and, again, allow agents to bring properties and consumers to list directly. In Europe, there's a company I know very well called Tapu, who's also presented at some of the other conferences, who are also offering this platform online. You can list your property for sale. Again, an experience that doesn't require agent, although Tapu also collaborates with agents when they want to bring their properties as well. So I think we should really look carefully at what's going on there to see what may be happening in the future in our Western markets. And one final thought is that for a portal, if you were to think about getting a transactional capability by integrating a tech-enabled brokerage, that would provide perhaps a very effective shortcut. And if you start to think about what is the value that a portal brings to a tech-enabled brokerage, you can think about it in terms of getting vendor leads. A portal has a far broader reach, so there are going to be far more people looking to buy who also have a home to sell. If you think about actually generating buyer leads, clearly a portal has far more traffic, far more free traffic than a tech-enabled brokerage has. And if you think of the scale you would have, you could also probably make that negotiation and closing part also more effective. So in my view, the market is almost requiring, compelling that this is going to happen, and I think it's very likely that it will. So those are a few thoughts on real estate. Let's spend a few minutes on cars. And the first thing to remember about cars is it's actually a lot in common with real estate in many respects. So first of all, the dependence again on these mid-size intermediaries is not a good idea in my view. You know, here are examples of European dealers. Why use premium real estate and fill it up with cars that most people would probably prefer to watch online? Why pay for salaried salespeople when many people would perhaps prefer not to have to negotiate with a salaried salesperson, and so on? During the pandemic, I think that the iBuyer models have had a disproportionate impact. iBuyer, or I call them the iDealer models, has had a disproportionate impact on changing consumer expectations. When I buy a car, yes, I'd like to have it inspected. I'd like to have the ability to take it back if I actually don't like it, and I'd like a warranty. So although the market share of these iDealers so far is very small, here in example, Carvana sold 425,000 cars last year, just over 1% of total market, and that's after 7 years. So even though their market share is not big today, Cazoo thought that they would get to 5% 6 months ago. Now I suspect they'll probably have scaled down those ambitions. So these businesses are not going to dominate transactions, but they have dominated consumers' perceptions of what they expect to get from a transaction. Then we have, let's call it the traditional mega dealers. They have also upped their game during the pandemic. We've got CarMax here, and then CarShop, which is the sort of UK, similar business in the UK, but smaller. Most of these cars are available to buy online. And again, you have a degree of, it's not quite as good as, but you have a degree of, you can have a test drive, you can take it back if you don't like it, and so on. So the perceptions, the requirements of what consumers want are going up. Well, let's now think, what have classifieds guys been doing while we've had this degree of innovation going on in the market and the changing customer expectations? Well, if we look at the landscape, first of all, there's the B2B side, which I won't spend much time on. That's where a portal, in this case is Auto Trader, is helping dealers offer trade-ins by being the source that then buys that traded-in car for them. C2B, consumers selling to businesses. We've had the instant cash offer businesses around for a long time in the form of Auto One, for example, in continental Europe. What's interesting is that we now have classifieds players who are offering a cash buyer option, and the cash buyer offered by the platform itself. The second version of that is the direct offers from selected local dealers. Here, instead, the classifieds platforms are providing a mini auction where local dealers, approved dealers, are making bids for your car as an alternative to you listing that car and dealing with the offers for themselves. And then the third block, the B2C block, where there are 3 different models which classifieds are involved in. The first is commission sharing, which is particularly in the case of HeyCar. Then we have what I've called rather convoluted the e-commerce overlay, which is when the classifieds player is giving an e-commerce envelope so that you can effectively search, click to buy, and they're doing all the difficult stuff behind the scenes. So Auto Scout Smile, Car Sales Select, I'm sure Jonathan will talk about them in more detail later on. They are very good examples of that. And then the final option, which is the most radical of all, is what I call the in-house iDealer. So let's quickly compare and contrast these 2 models. So when we talk about C2B, what's interesting is if you compare the Auto Trader or Auto One model with when the local dealer buys, I think that ultimately you get a much neater and more consistent experience if it's all done by the platform, right? So Auto One can ensure the speed with which your car is taken and the offer is made and you get paid. And you get a more consistent experience, and the price will be, it won't be the same as selling to consumer, but it'll be a decent price. But it's very capital intensive, so the platform has to finance it, and Auto One is now getting about 10% gross margin. If you look at the local dealer offer, the benefit for a classifieds guy is, I don't need much capital to set it up. But the downside is that the consistency of the experience is very hard to manage because you've got a ton of different dealers who are working in a mini auction which you have created. So, and depending upon what those dealers are like, the experience will differ. You probably will make a little bit less money, but you won't require the capital to do it. I'm estimating around $250 on a $10,000 car. Then if we flip to the other side of the transaction and look at B2C, if you compare an iDealer model like a Cazoo with the e-commerce overlay, the iDealer provides that very tight, nice consumer e-commerce style experience, but the downside is there are fewer cars to choose from because they are owned by Cazoo. but they've all been inspected in a standardized way. They've been refurbished to similar standards. And once you click to buy, it shows up in your driveway, usually within 2 to 7 days. If you look at the e-commerce overlay model, broader range, obviously, because there are lots more dealer stock which are covered within this e-commerce layer. But again, they won't all have been inspected in the same way. They won't have all been refurbished to the same standard. And the worst thing of all is that once you click to buy, you typically have to wait 4 to 5 weeks for the car to show up. On the other hand, the economics are more attractive. So Cazoo is making a gross profit of only about $150 per $10,000 car, let's say, at the moment, hoping to raise that to the equivalent of 10% or $10,000, but they're not there yet. Whereas the e-commerce overlay guys are sharing a commission and probably making $400 or $500 on a $10,000 car. I also think, similarly in car, that the data and traffic from a classifieds platform will bring competitive advantage to whoever does that transactional model. Why? Well, again, you have a lower supplier acquisition cost. You have the ability to know which cars are in demand, which means you can then know which ones to buy. You have privileged access to all those consumers coming into your platform to make them offers, to say we'd like to make an offer for your car or ask for an offer. You can be much better at pricing that car because you've seen with every single data point on your platform what cars get the clicks and which cars don't based upon their pricing and condition. Your ability to then the lower buyer acquisition cost is also a benefit because you have free traffic, just as I was talking about real estate integrating with the tech-enabled brokerages. It's exactly the same forces that are coming to play here. And finally, it's probably easier also to organize offload of cars in the wholesale side as well if that's necessary. So that's going to drive, and that's why we have now seen the first examples of classifieds and fully transactional coming together. So Qasim iCar I don't know if it was my speech at the conference in Bangkok which got Patrick convinced, but it's happened, and it's fascinating. So you can see what's happening here. If you're selling your car, you can choose between list it, right, the traditional way, or sell it on Qasim, which then means you get the cash offer along the lines I've just described. And if you want to buy a car, well, guess what? There's this rather nice Qasim certified option available on this Carlist Malaysia, which is one of the iCar Asia properties. And of course, when you then click into those Qasim certified offers, surprise, surprise, we've got a trusted dealer from Qasim, and they're obviously providing the classic package of inspected, warranty, no questions asked returns. So that's happening there. And then also OLX, who some of you remember started by buying Frontier Car Group to get a C2B capability. They have now gone one step further and are now also offering B2C. So roughly 30% of the cars which they sell on a transactional model are being sold B2C. So here again, you have the example of effectively, in this case, it's OLX Autos, which is the approved dealer on an OLX general classified site. So those of you who thought that we'd never have in-house transactions happening on classifieds may want to reconsider your thoughts. So let's quickly, on that note, wrap up and think about how we were thinking 2 to 3 years ago. This one, I've actually taken some projections from the June online version I did. If we look quickly at what I was thinking of was going to be happening on the real estate side, 360-degree virtual tours made a lot of sense given the pandemic. That's becoming standard as expected. I also thought that maybe there would be small marketplaces for conveyancing services. That hasn't happened yet, although, for example, Zillow now offers closing services. Things which have kind of been adopted, you could argue, well, nobody has bought a tech-enabled brokerage yet, right? So that more outrageous expectation there hasn't happened yet, though I do believe it will happen maybe before I'm back again. But what has happened is that, as I said earlier, we are starting to have that taboo on sharing commission is starting to go away. And we've seen it both on the seller leads, the vendor leads, particularly, but also now on the buyer leads as well, for example, with Zillow Flex. What hasn't happened yet is my recommendation that classifieds should start getting into buy before you sell, and these fintech products, which I think would then help them enormously. And in fact, that's really what I would say on real estate. I think without developing on-portal transaction capability, classifieds portals' future, in my view, isn't very exciting. I think that they will increasingly lose out to high-traffic tech-enabled brokerages. But by proactively embracing transactional opportunity, portals can bring stronger businesses. And I think we should look in emerging markets, you should be looking at the collaborative transactional businesses like Kinto and Dara and Loft, whereas in Western markets with tighter real estate agent groups, you may want to look about those buy before you sell services. And then very quickly on car, this time I think the car guys were thinking very similarly to myself. If we look at Smile and Select, it's exactly this blend of own branded inspections, which I was talking about here, combined with the shopping e-commerce overlay. And then own label plus tech-enabled brokerage. Well, yes, as I was just saying, OLX Autos and iCar Asia have already exactly taken those steps. So that's my conclusion on cars is very similar. I think the classifieds guys need to develop their own capabilities. And if they don't, they will have challenges. But if they do, then they have a bright future. And I think these mergers, such as with iCar and Qasim, show where things may go. And a very, very final thought, C2C remains the new frontier. I'm yet to see a good managed C2C platform coming out, but maybe we'll start to see that in the coming years. Thank you.
Malcolm, thank you very much for that. Bruce, can we bring up the Slido, please? Okay. It's got some questions here which I think would be good to go through.
Okay.
So are iBuyers just fintech businesses in disguise? Okay, and if so, what does this mean for banks?
No. I mean, I think there's more to it, right, than that. I think an iBuyer really is also trying to become a service business that delivers that perfect seller experience. If you want to sell your home, if we're talking about exactly. If we're talking about real estate, then if you want to sell your home in an effortless way, then I think there's a whole process that needs to go around that. There are obviously also real estate speculators, right? If you think about having to make a call on whether property prices are going up or down. But in the sense that are they making more money out of financial services products than buying and selling homes? Well, the answer is maybe, but not necessarily. But certainly the attachment rate of a mortgage has to be very high for the economics to look good.
Yeah, I think part behind that question might be along the lines of if you think about the Knox of the world, who are this buy before you sell type service. That's stepping into this sort of bridging finance area, which has traditionally been a sort of a high cost form of financing. Is that going to impact, you think, other lenders? Because now the portals, et cetera, are stepping into that part of the world.
So, I mean, the challenge for the Knox and the Orchards is that they didn't have the liquidity of a portal behind them. And so their unit economics is much less attractive, in my view, than it would be if they were able to partner up with a Zillow or something like that to try and offer the same services. So I simply think that we will see partnerships in the future where the skills, huge skills which a Knocker and Orchard have built up, are married with the huge amount of data and insight which the portals have. And I think that will be the magic formula.
Which then leads into there's actually a couple of questions here I think sort of link. One's about brand. It's brand in the car transaction, but I think this is branding overall. All the investment that the portals have done, whether it's the car portals or the real estate portals over the last 20 years, is that giving them an advantage in the new world?
Brand is fundamental, and I think creating a branded product is the future when a marketplace stands for a certain level of quality and experience, it changes everything, right? A custom approved car means something. So I think, so I think that's really important, and I think you'll find that the most powerful managed marketplaces will all develop this kind of stamp of quality.
How do they then manage profitability? Because behind brand is service, and behind service are people, right? The transaction's actually got to work flawlessly. The car's got to be perfect. They've got to look at the cars to make sure they're actually certified. That takes humans, which adds cost to the business. How do you see this playing out?
So we're still at a stage where no one has made EBITDA on a iDealer, right? So Kazoo, Carvana. No one's done EBITDA positive yet, although we have seen positive unit economics until last year when there was this, it's become very difficult for people like Carvana to get enough quality supply. And that's why I keep on thinking that perhaps it's the classifieds guys that have better ideas about where the supply is, not least from consumer sellers who are on their platforms. And I have a feeling that for the Carvana-style economics to look better, they should think about working more closely with classifieds.
Okay, one last thing we're going to talk about, the top one. Actually, no, we're going to save the top one for later, because I'm going to get Malcolm to come back and join me on a strategy panel with a couple of other gentlemen. What do you think about the legacy fears to hurt, what is it, legacy? I don't know. What do you think that the legacy fear to hurt their paying customers, agents, dealers, from marketplaces entering transactions? Has it gone? I mean, this is the interesting question. Could Rightmove now, for example, in real estate, move more into the transaction and get away with it?
But, I mean, isn't it amazing that we're now talking about it happening, whereas 3 years ago we were talking about it never happening?
Yeah. And 10 years ago,
so it's gone from do you think it might to will it be complete or only partially? So it's clearly going to take time, and I have a lot of respect for the guys at Rightmove. They have a very different market structure in terms of brokerages, of real estate agents and their market share and so on. But they will be the last, right? But look at it, emerging markets is clearly where this is happening much faster. And then I think a lot of Western Europe, I know France, Italy, we can see it happening faster than in the UK.
Yeah. One last question, because it's at the top, I think is important. Subscription-based models, are they the thing of the past?
Oh, if we're talking about cars there, are we? Or
both?
Well, subscription-based model on real estate would be rentals, but
No, there are some companies that you just sign up and you can visit an apartment for a certain period of time and use it.
Okay, I think car subscriptions is here to stay, even if Kazoo dropped it. I think that it makes sense, and that there are companies which are doing a very good job. But you need scale. You need scale. You need a brand. But there's definitely an opportunity to play this sort of the leasing model of and access supply from dealers of cars which have a 3 to 5 year lease, and OEMs if necessary, and create valuable products there. That's going to happen. On the real estate side, I haven't worked it out yet, but I'm not saying no.
Okay. Malcolm, thank you very much. I'm going to enjoy having you back on stage in a few presentations time. Thank you.
Very welcome.
Excellent. Thank you very much.